We just witnessed something that should terrify every single person who understands how modern finance actually works. The Bank of Japan, the institution that has been running the most extreme monetary experiment in human history for over 3 decades, just lost control. It didn't lose control in some abstract, theoretical sense. It lost control in a way that is now forcing every central bank on the planet to make an impossible choice between defending their currency or preventing a complete systemic collapse. And if you think this is just another ordinary story about Japanese monetary policy that doesn't affect you, you fundamentally misunderstand how the global financial system is wired together and what happens when the world's third-largest economy starts to unravel. Before we go any further, make sure you subscribe, because what I'm about to say is not being covered anywhere else with this level of structural clarity. Here is what is actually happening. The Bank of Japan has been holding interest rates at or below zero for over 25 years. They have printed yen on a scale that makes the Federal Reserve look conservative. They have bought their own government bonds, corporate bonds, ETFs, and real estate investment trusts, doing everything possible to inflate asset prices and devalue their currency. The entire strategy was based on a single assumption, that they could control the pace of devaluation, manage the decline, and inflate away their debt without triggering capital flight. That assumption just collapsed. The yen is collapsing. Not declining, collapsing. And when I say collapsing, I mean we are watching a major global reserve currency lose 30, 40, or 50% of its value in a compressed time frame, while the issuing central bank is completely paralyzed. They cannot raise interest rates meaningfully because the Japanese government's debt-to-GDP ratio is over 260%. Every percentage point they raise rates adds trillions of yen in debt service costs that the government simply cannot afford. But they also cannot keep rates at zero, because the currency is in freefall and Japanese citizens are watching their purchasing power evaporate in real time. This is the endgame of monetary manipulation. This is what happens when you try to print your way out of a debt crisis for 30 years straight. And here is the critical point that nobody is talking about. Japan is not an isolated case. Japan is a blueprint. Japan is showing every other developed economy exactly what happens at the end of this cycle. The European Central Bank is watching this. The Federal Reserve is watching this. The Bank of England is watching this. And they are all asking themselves the same question: are we next? Because the structural dynamics are identical. Massive public debt, aging populations, unfunded liabilities, central banks that have suppressed interest rates for so long that the entire economy has become addicted to cheap money. The only difference is timing. Japan went first, but the destination is no different. Now, let me be transparent about what this means for the global financial system. The yen carry trade is one of the largest financial structures in the world. For decades, investors have borrowed yen at 0% interest and invested that money in higher-yielding assets worldwide: U.S. stocks, emerging market bonds, real estate, commodities, everything. This trade works as long as the yen stays weak or stable. But when the yen collapses and becomes volatile, when borrowing costs spike, and the currency moves against you by double digits in a matter of weeks, the entire trade must be unwound. We are talking about trillions of dollars in positions that must be liquidated simultaneously. This is not a theory. This is happening right now. You see it in the volatility of the stock market. You see it in the sudden moves in Treasury bond yield. You see it in the fact that correlations between normally unrelated asset classes are all moving toward one. Everything is moving together because everyone is trying to exit the same trade at the same time. And here is where it becomes even more dangerous. The Bank of Japan is now trapped in a feedback loop. If they try to defend the yen by raising rates, they blow up their own government's balance sheet and trigger a domestic debt crisis. If they don't raise rates, the yen keeps collapsing, capital flight accelerates, and they lose all credibility as a central bank. There is no good option. Every choice they make from this point forward only makes the situation worse. This is what a real currency crisis looks like. And the terrifying part is that this is happening to the world's third largest economy, an economy that has been integrated into global supply chains, financial markets, and trade flows for half a century. When Japan destabilizes, it doesn't stay in Japan. It spreads in waves, and that wave has already started. So, what does this mean for you? What does it mean for your assets, your portfolio, and your ability to preserve wealth in an environment where major currencies are entering a terminal decline? Here is the harsh reality. Devaluing the currency has now become the global default setting. Every central bank is choosing inflation over default. They prefer to destroy the purchasing power of their currencies rather than allow the debt structure to collapse. This is not a conspiracy. This is observable policy. And it means that holding cash, holding bonds, or holding any claim denominated in a currency that is being actively debased is a losing position. The assets that will survive this situation are those that exist outside the traditional monetary system. Gold has been doing this for 5,000 years, and it is doing it again right now. Bitcoin is doing this in digital form, and despite all the volatility and criticism, it is performing exactly as it was designed to in an environment of currency debasement. Real assets that cannot be printed, that have intrinsic scarcity, and that do not depend on a central bank's credibility are the ones that will hold their value. However, there is a critical nuance that most people overlook. Not all real assets are created equal. The ones that will perform best are those that are liquid. Assets you can move. Assets you can reallocate when the system begins to freeze. Because liquidity is about to become the most valuable thing in the world. We are entering a phase where markets that appear deep today will freeze overnight. Assets that look safe because they have a AAA rating or are government-backed will fall into a 20, 30, or 40% vacuum, because when everyone tries to sell at once, there will be no buyer. This is not fear-mongering. This is what happens in every currency crisis. And now we are watching it happen in real time to a G7 economy. The Bank of Japan losing control is not the cause of what is coming. It is a symptom. It is proof that the monetary system, held together with duct tape and central bank interventions for the past 15 years, has reached the point where internal contradictions can no longer be managed. The debt is too large. Leverage is at extreme levels. Unfunded liabilities are massive. and the political will to make hard choices does not exist. Therefore, central banks will do the only thing they know how to do. They will print. They will intervene. They will coordinate. The Federal Reserve will open swap lines with the Bank of Japan. The European Central Bank will provide liquidity. The IMF will step in. Emergency meetings will be held, coordinated statements will be made, and assurances will be given that everything is under control. And every one of those interventions will confirm exactly what the collapse of the yen is already telling us. The system is broken, and the only way to keep it running is to devalue every currency simultaneously and hope that people do not notice their purchasing power is being destroyed in real time. But people are waking up to the situation. Japanese citizens are noticing. And when the currency crisis spreads, when the next domino falls, when the European Central Bank or the Federal Reserve finds itself in the same impossible position the Bank of Japan is in right now, the entire world will notice. This is not a distant theoretical risk. This is happening now. The timeline has compressed, and the window to position yourself outside the traditional financial system, to move into assets that do not depend on central bank credibility, is closing faster than many realize. So, when you see headlines about the yen hitting new lows, when you see emergency policy announcements from the Bank of Japan, understand that you are not watching a regional currency problem. You are watching the beginning of a global monetary reset. You are watching the endgame of a 50-year experiment in fiat money reaching its logical conclusion. The question is not whether this system will unravel. The question is how fast and how violent it will be, and whether you will be on the right side of the largest wealth transfer in modern history when it happens. Subscribe to my channel, and let's continue this journey together.